All right, we also have Mr. Venkataraman joining us this morning of Titan to get a better sense of the numbers this time around. Mr. Venkataraman, good morning. This time we've seen the jewellery segment growth at 20%, slowing to 4% in December. Talk to us about the trends, how they're looking. We were closely eyeing the numbers on the jewellery segment. Just if you could articulate how the growth has been according to you and how trends are shaping up here on.
Yeah, we had a growth of 15% in the retail offtake of Tanishq in Q3. That was very, very satisfactory and slightly ahead of the estimate that we had given a quarter back. And our sense is, from a competitive position, we have improved our position in Q3 since we hear all around that most of the people declined in the high single digits to a low double digit in the quarter. So it's a relatively much better performance as well. And it reconfirms the strategies that we have been working on, the strength of the brand, our execution excellence, our assets on the ground working hard to continue to gain competitive advantage.
So as we look into the future, are you optimistic or are you still cautiously optimistic?
From a sentiment point of view, our sense is that the muted nature of the public sentiment will continue for many months, and therefore we have to work within the constraints of an industry which is perhaps not growing. And therefore there is a certain caution which naturally comes as a result of that. But at the same time, we are at best a mid-single-digit market share business in the jewelry industry, and therefore there is so much of headroom for growth. Even if the 100 of the jewelry industry were to drop to 95 or 93, we are just 6 out of that 93, and therefore a lot of headroom to grow. Obviously, the ability to grow is constrained by that situation, and therefore we need to work that much smarter, innovate that much more, execute that much better for us to continue to grow. So we continue to be excited about the opportunity of the future, and we are reworking on the ways of growth to make sure that we sort of claw back to the growth levels that we're used to.
Next question then, and that's on gold prices, since you talked about going into the future. They've been moving up, and they've moved up significantly in the first week of January itself, or since the first week of January. Has price surge affected your volumes, or do you at least envisage that they are bound to impact your volumes going into Q4?
They do impact volumes, and they have risen so much this year and so much in the recent past. We are hoping that it will settle. It's something that's totally outside our control. So much of global economy, global politics, which are impinging on that. And, beyond a point, it's a little pointless to fret about it, and we just look at the opportunity and, create initiatives and move on with life.
Be able to stick by with your guidance of 11 to 13% growth, or are you revising your growth levels for FY21?
No, for FY21 we have not yet given any guidance. For H2 of FY20 we had given a guidance which we are sticking to.
Do you think that the addressable market which Titan currently represents, your market share, again these are estimates which we get from brokerages, is about 10 to 12%. Do you think now for Titan to keep on continuously gaining market share, which you gained one time immediately after GST, it's going to be difficult?
You're talking about in the jewelry business?
Yes, jewelry business. I mean, what I'm trying to understand from you is the following, sir. In case my question was not very clear, have you reached the peak of the market share gain, and now do you think it's not going to be substantial and transformational, it's going to be only incremental?
Actually, no, because if you look at the FY23 dream that we had declared 2 years back, it was actually not at all impinging on the structural changes that were happening as a result of GST or anything like that, or demonetization. They were built on upside opportunities sitting in big segments where we were small players, particularly wedding, high-value diamond jewelry, Middle India, and therefore those which on which we had built our 2.5x continue to remain relevant. The wedding market is very large, showing no real signs of slowing down in terms of the role of jewelry in that. High-value jewelry, diamond jewelry segment is very large. The upper the upper middle class and the upper class segment sizes are growing. Middle India is still a very large opportunity. We've just set up the highest number of stores ever. In 9 months, we have matched last full year's number of stores in just 9 months this year. So therefore, we don't see the opportunity for market share gain abating just because we are seeing the last results of the GST benefits. So it's more a fundamental opportunity that we are pursuing and not anything which came by our way because of the government.
But just to understand, given that the acute slowdown in terms of sentiment and demand which had hit us closer to August, September, October, or September, October, November, is that behind us? And if that is behind us, can I safely infer that FY21 is going to be better than FY20? I mean, simple. I'm not putting words in your mouth for a number, but I'm trying to gauge your understanding.
No, I'm not sure about the situation in FY21, honestly, but we certainly intend to make FY21 better for us than FY20. So in some sense, I'm answering your question without indicating any guidance, but by doing things better, smarter, faster, you can still do better in a market which is under pressure. And I suspect that the market is going to be under pressure for a while. Don't really know how long, but we are assuming that at least the next 2 to 3 quarters will be like this.
The long-term picture, the growth projections, what people had based on your FY19 numbers and FY20 numbers, there is going to be a reboot at least because nobody expected this kind of a disruption, and it will be reasonable to hunker down FY21, FY22 estimates down. I mean, is there going to be structural change because of one bad year in the jewelry business and growth of Titan?
Actually, if I were to just look at the numbers which built up to that FY23 2.5x, at the moment they appear a little difficult. I'm not disagreeing, but FY23 is still 3 years away. It is very possible for us to compensate by growing faster in the later years. So at the moment, I'm not giving any revised view on FY23. All I'm saying is that we certainly expect FY21 to be better than FY20 because we're going to work smarter, harder on many things that we need to do. But we're at the same time prepared for a situation which is going to be very, very tough, and therefore we need to get tighter on our operations, on our costs, on our management of assets and all that.
Venkataraman, what's the cash flow situation looking like right now, given the factors that we've just been discussing? Are you seeing pressure there? What's the outlook going forward?
No, there's no pressure, but the cash flow targets that we had, we couldn't meet because our sales were significantly affected given our budget compared to our budgets, and also the customer acquisition that we do through gold exchange programs, where we buy customers' gold, old gold that they bought from other jewelers. So the flow of that has been very encouraging and in fact has been driving our growth, and therefore the share of what we call spot gold versus gold on lease was higher in the 9 months, affecting the cash flow situation. But we are not in any pressure on cash flow. Our balance sheet very, very strong.
Titan has managed to grow largely organically, right? One of those rare Tata companies which has not made any large acquisitions. You started as a watch company, became a jewelry company, you migrated into different pockets. Would you be tempted to look at something in the inorganic space? Because if growth gets compromised and the cash flow what you're generating and the brand what you've done, it makes perfect sense for you to think outside what you've not done in the last couple of years.
Actually, we did acquire one of the most exciting companies around today, which is Carrot Lane, 3 years back, and Carrot Lane is doing exceedingly well. You're right, our approach and our DNA has been more in organic and creation, but we are certainly, it's not something which is out of our thinking, but nothing particular to share with you at the moment.
Can I say that a month ago things were bad, but they've not gone from bad to worse. They've not improved, but bad has not become worse.
Sorry, could you repeat?
No, my question was that, let's say if I would have spoken to you in December and if the situation was bad, can I safely say that bad has not become good, but bad has not become worse also?
Actually, we have grown about 9% in sales in Q3 and 15% in profits after tax on a consolidated basis. So we are quite satisfied with the performance of the company given the situation in the discretionary category. With the discretionary categories under pressure. And we are a high ticket lifestyle kind of company. And I would say we are quite satisfied with the performance, as opposed to saying that bad has not become worse.
So you're satisfied. If I say that, what is your benchmark of good? What would you say that this is? I mean, I'm satisfied with the performance, but what is your benchmark when you say this is good?
No, we are used to a growth rate which is much higher, and that would be good. So achieving that growth rate would be good. We are clearly behind on the growth rates that we used to. Like typically we have done a 20% growth in jewelry for many years, and we did only 11 or 12 this year. So that 20 would have been good.
Or will not come back in next 3 years?
Sorry?
When do you think 20% growth could come back?
3 years is a long time to say anything.
Okay.
Actually, it's not impossible for it to come back next year. So let's reserve the judgment on that. Next year is still 15 months away.
All right, appreciate your time. Thank you for joining us, and look forward to much more engagement with you. And I sincerely hope the next time when we meet, your opening remark is not satisfied, but we are very happy with your very, very happy with the numbers.
Yes. Thank you very much. Thank you.